Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I'm your host, Zen Sams. Up next in our Business and Buzz segment brought to us by Revere Securities. Today, we're chatting with President of Revere Securities, returning contributor Kyle Wool, and we are joined by Paul Caldwell, Chairman and CEO of Caldwell Soames, along with his good friend Thomas Carter, an entrepreneur, CEO, and futurist. Now, Thomas is the founder of Dealbox, and he's also the current interim CEO of Total Network Services. And it's interesting because that company is an emerging leader in fintech. And Thomas has always looked deeper into the utility of blockchain. And Dealbox brings SEC compliant tokenized securities into capital markets. And that's relevant with what we're talking about today. We're chatting TradeFi meeting DeFi. That's right, traditional finance versus our decentralized finance model. Now, decentralized finance has managed to create both excitement and confusion as people are seeking to maximize the use of this blockchain-based ecosystem. So let's review the traditional financial system. So traditional finance is the management and movement of money. It builds products and services around basically 6 key areas of financial activity: pay, invest, trade, save, borrow, and of course, risk management. Simple. Now, what is decentralized finance system? Well, decentralized finance is building products and services around those very 6 areas of financial activity that I just mentioned using blockchain technology, which is essentially distributed ledger technology, and it comes with a bunch of decentralized protocols. So what do both enable, and what ways do either of them matter to me, to my personal life or my business? Well, here to chat some more are my experts at hand, Kyle, Thomas, and Paul. And our panel ranges from Kyle with his traditional finance mentality to our futurist Thomas Carter, and to, of course, our practical Paul is what I call him. Welcome to the show, gentlemen.
Thank you.
Thanks, Zach.
Thanks. Good to be here.
All right. So Kyle, let's kind of kick it off here. As we know, DeFi offers advantages to unbanked entities, while it also reveals the way in which the traditional technology can increase innovation within the financial space. And of course, these differences also create risk, especially when you consider the lack of regulatory protections and how these can impact lenders and borrowers. And interestingly enough, Kyle, Janet Yellen had a quote. She said, "When new technologies enable new activities, products, and services, financial regulations need to adjust, but that process should be guided by the risks associated with the services provided to households and businesses, not the technology that's underlying. Where possible, regulation should be tech neutral." And that was our Treasury Secretary, Janet Yellen. So what do you say to this? And are you on board with the overall concept of DeFi?
I would say I'm not an expert like the two gentlemen that will be on this panel with me today. My background comes out of more the Wirehouse, Morgan Stanley, Oppenheimer side of the business. I am an entrepreneur. I do make a lot of personal investments. I have made some personal investments in some DeFi technology. I'm probably not as optimistic as the other two gentlemen here that'll be adapted so fast. I think the SEC and FINRA and the other major regulatory bodies will not be so quick to adapt, where all of a sudden we're clearing our 144 shares through DeFi and through coins. But I'm optimistic there may be a future for it. I do think the fact when I wire money between here in Europe or here in Asia, that it takes 3 days with an MT103 or with the SWIFT system is archaic. And I would love to see some of this technology speed that up. But I'm probably not as optimistic with my 20 some years experience dealing with regulatory bodies on Wall Street that this will be adopted in the next 3 to 6 months.
Okay, fair enough. I'll take that. Thomas, so long as crypto assets remain confined to their own world, they pose little, if any, threat to the traditional finance, to TradeFi system. And indeed, the fact that the recent plunge in the market capitalization of crypto assets from a peak of 2.7 trillion from November to only 1.1 trillion today had virtually no impact on TradeFi suggests that these assets are systematically irrelevant, at least for now. Some would agree, some would disagree. What do you say to this?
Well, I mean, again, with crypto, crypto's sort of crypto, right? But we're more into digital assets and regulated security token offerings, much like the path or, Kyle's background. We want to take regulatory framework and stand up these digital assets and protocols so that there is a reduction in friction in capital markets. So when you could have your AML, KYC, accreditation verification, and all that in a smart contract, you can move digital assets, I think, freely, and they'll be regulated. Again, cryptocurrencies, I really don't have much of a comment there. I invest in them, but I like the digital asset space as we sort of stay into the regulatory framework with security tokens.
Yeah, of course. And when you look at interestingly enough, one of the main reasons for the belief that DeFi would supplant traditional finance is because blockchain cryptography makes safe transactions more accessible and quicker and really more efficient. So overall, society is going to benefit, in my opinion, from an upgrade and a well-designed financial system. And DeFi, for example, removes fees charged by banks and other financial organizations just for accessing their services. So this really enables individuals to have actual ownership of their money in a straightforward and permissionless manner. So if you wanted to send money to a cousin in another country, it could be a simple and a very quick process. As a result, traditional finance stands in very sharp contrast. Paul, this is one of your areas of expertise. So while the traditional financial system works on a centralized platform controlled by government agencies and intermediaries of all kinds, DeFi works according to a protocol that runs on this decentralized infrastructure powered by blockchain, mainly Ethereum. And consequently, programmers can develop these customized, efficient, and secure financial platforms that are open to anyone with access to a computer and internet. Undoubtedly, DeFi is the new frontier since it allows all these millions of people who don't have access to these traditional financial systems for various reasons. Globally, we have over 1.7 million people that are unbanked, to be managers of their finances and transact with everyone thanks to decentralization, promoting really equal opportunities and unprecedented economic growth. What do you say to this? And talk to me about the bridge here.
I think it's absolutely a bridge, Zen. First of all, I want to say about DeFi, I really believe that the cap markets people and Fiserv and these kinds of companies, they have nothing to worry about when it comes to these DeFi plays that are talking about disrupting them. Because if you really dig deep, you'll find most of these decentralized finance plays are going to disrupt the very companies they rely on to be in business. So therefore, I really am not too concerned about, I don't think they have anything to be concerned about. In fact, that's why I love Thomas's model so much, because it sits in that regulatory framework. I think one thing that everyone should really be familiar with is the name blockchain, but it's the same as like a database. It's junk in, junk out, no matter what. So there's still a long way to go, but there are efficiencies being built into blockchain. Algorand's a great example. Is one example of a company that's really created the Algorand blockchain meant for finance, meant for capital markets. And I think that the technologies offer another level, a much higher and up leveling of speed of execution, surety of settlement, and things like that. And I think those things are important. And where I find real value are things like, ACH, Nacha. There was Nacha, then now there's instant Nacha, and mid-year next year, they're talking real-time Nacha. But there are companies that are building integrations between those systems, between the Nacha platform and Chats and BIC. And so when those things fully integrate, and it's no longer just about API libraries because everything's already tokenized, now you have an interoperable model where cross-platform authentication and settlement can happen real time, not instantly, not in 3, 5, 10, 20 seconds, but instantly. And that's, I think, really at the infrastructure and the contextual level where it's going. As far as content's concerned, Zen, we're not, over here in our portfolios, we're not very much concerned about cryptocurrencies per se. Blockchain, yes. Cryptocurrencies, if they're in Thomas's world, we're very interested in where he's taking TNS. But we'll stick with cap markets for the moment, because I really think that's where think that's where the world works.
And Kyle believes that too, and most level-headed, successful people here in your part of the woods think the same way. Kyle, coming back full circle, while we're in these early stages of these technologies, blockchain, DeFi, and smart contracts are really creating new opportunities at an incredible speed. For example, companies that list their shares on traditional systems such as the New York Stock Exchange, London Stock Exchange, Tokyo Stock Exchange, right? They're going to begin to issue tokens, a kind of shares in shares that can be acquired in a decentralized way by users around the world, giving the opportunity to access the stock market to a large number of investors of all sizes. What do you say to that?
Well, I think the conversation that we're having right now is very interesting. I agree what Thomas is trying to do to regulate all this and do it properly with KYC and AML. I think that's a big part to your question, right? So the more people that gain access to the stock market, also you have to look at the risk tolerance of these individuals. So just by bringing more people into the market doesn't mean you're going to be bringing more knowledge into the market. So I would warn people, even though you'll have more people having access to the global capital markets, whether it's through the NASDAQ, New York, London, et cetera, to make sure that you understand your own personal risk tolerance, you understand your own personal net worth. And just because you have access doesn't mean you should be using margin and buying meme stocks or trading crypto, 10-to-1 leverage and things of that nature. So I do think it's great that more people have access, but I also think we should take it with the grain of salt that it is, and that people should not get too over exuberant about it.
Wise words, my friend, and that's why you do what you do. Thomas, DeFi is by definition more open and transparent than traditional finance systems, lowering barriers to entry and potentially really increasing trust between users and lenders. And this guarantees that financial services are accessible to everyone, including small businesses and households with inadequate or even non-existing credit records. This feels like a much better approach. What are your thoughts?
Again, I'm super big on disclosure, and I think if you follow regulatory framework, you're going to have the proper disclosure and the proper information to do the research and to make more informed investment decisions. You know, having these protocols that are going to create a lot of the efficiency, the smart contracts, and again, removing the friction, but the real money's not going to get behind crypto, in my opinion, just because it's uncertain. And I think you could bring a level of certainty to digital assets that are regulated. And again, I believe that, digital securities, security tokens, I don't know where it's going to wind up at the naming of this at the end of the day, if it's going to be a security token or digital securities or, fall into the digital asset category. But, the regulatory bodies, the SEC, I mean, they're doing this stuff for a purpose. I mean, it's great to have sort of the ability to jump into digital assets and explore some of this innovation with cryptocurrencies. But I think you have to look at it very carefully, and there's no getting rich quick in any of this stuff. So do the research, do your due diligence, and I think if you could, having good information to make more informed investment decisions is really the way to go.
Well said, well said. And this brings us to the end of this segment. I just wanted to thank you all for coming on and chatting. Great perspectives here. Paul Caldwell, Thomas Carter, and of course, Kyle Wool. You guys really helped shape a very interesting conversation that really brought, real world conversations to the table that people are having right now and presumably are having debates over this at the very table, because I know that this is something that is hitting close to home, especially not close to home, but hitting many markets. So thank you both. Thank you all for coming on.
Thank you.
Thank you.
Thanks, Ed.
Guys, that was our Business and Buzz segment brought to us by Revere Securities. Make sure you check out reveresecurities.com. That was Kyle Wool, president of Revere Securities. Lastly, history shows that a revolution consuming an existing ecosystem such as TradeFi is exceptionally rare. Given that digital photography has nearly wiped out film stocks and corporations like Kodak, it's possible, but it's improbable. TradeFi and DeFi are almost certainly going to combine. TradeFi offers trust, size, and regulatory approval, whereas DeFi just simply brings innovation at this point. And people feel that DeFi will see a lot more attention over time, and that is only the beginning. Others claim that when TradeFi gets on blockchain, that's where the true application, and the true magic will emerge. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. We'll be right back after this.
A Moment of Zen is brought to you by Revere Securities. Revere is committed to building a relationship of trust in which they work closely with you to help you define your objectives, explore alternatives, and choose the financial and investment strategies that are most appropriate for you. Go to reveresecurities.com.
Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I'm your host, Zen Sams. Welcoming back to our Business and Buzz segment brought to us by Revere Securities. We have our returning contributor, president of Revere Securities, Kyle Wool, joined by our good friend, Paul Caldwell and Thomas Carter. Welcome back, gentlemen.
Hey, good to be back.
All right, Paul, we were having a conversation about blockchain technology, DeFi, TradeFi, and all that good stuff. But the public and unchangeable blockchain serve as a decentralized trust source in DeFi. In the TradeFi arena, legislative authorities and regulators, on the other hand, provide public governance, providing central points of control that might limit market access and raise the danger of manipulation. What do you say to this, Paul?
Zen, I'm just wholly in the camp of regulatory frameworks that protect the public from the scams, from the bad actors that are in any space. I think it makes great sense, and I think there should be a way to create or exact policy against that reality, so that people know that, hey, look, if you're tempted to be a bad actor in the space and take advantage of people or whatever, then there are consequences for that. But more importantly, it's about getting the transparency in place and the information in place so people can make well-informed decisions. And I think that all these technologies that are getting developed at the contextual layer, not necessarily infrastructure, that too, but that's more back office, back end. People don't see that. They don't live with that every day. They just use it for whatever. But that contextual layer where content resides and so forth, that is customer facing, consumer using, I think until it moves from just being innovative and just being upwardly disruptive to a point where it's truly transformative and it transforms how people think about things that matter to them, I think it's just going to continue to just be basically irrelevant in the minds of the masses, because people simply get up every day, they go to work, they do their thing, they go home, they spend time with their family until something transformative comes along that transforms how they think about how they do any of that, like an Uber, innovative, disruptive, and then it transformed how people think about something as simple as taking a ride. Billions of dollars shift. In this space, when that happens, trillions of dollars will shift. But we're a bit away from that right now. Bit away from that right now.
Kyle, what are your thoughts on his answer?
I mean, I agree with both of them. Excuse me. I agree with both the panelists so far that we need to do this in a regulatory framework so everybody feels very comfortable. But I do think there's two 800-pound gorillas that are also in the room, which are the two largest economies. One is the U.S. dollar, the U.S. economy, which is the U.S. dollar, which is the fiat currency. Not sure how quick the United States government's going to want to give up full control of the fiat currency. And then you also have 1/5 of humanity that has no interest in this business, and that's the Chinese economy. And the Chinese economy has very little interest at all to do with crypto. And I know we're not talking about crypto, but we are talking about futuristic DeFi and TradeFi. And I lived in China. I lived in Hong Kong. It was very different from 2009 to 2012. That was the opening period of China. This is the closing period of China. So if you're going for this to be trillions of dollars, you're going to have the Chinese involved. And I don't see that happening anytime soon, but that's just my take.
That's a very interesting take. Thomas, pipe in here.
Yeah, no, I agree with the panelists. I think they're spot on. I also think that a big factor in any of this, and with new technology, and you could go back to the internet as a perfect example. You had IP addresses, and the internet really didn't take on until there was really didn't catch on until it was easy and DNS happened. So I think you need to have solutions around blockchain addresses, which we're addressing with $ your name. You want to have a human readable name that is an address that sits along this long hexadecimal alphanumeric address. So I think you need to have, in order to have any type of adoption, you got to have a standardization, and you have to have that simplicity. And I think a combination of simplicity and capital markets best practices and regulatory framework, sort of addressing these assets, then I think you'll start to see the adoption and bigger money step in and take hold.
Yeah, well, without a doubt. I mean, listen, currently we're really at a crossroads when it comes to this DeFi adoption. I mean, while we have these very large financial institutions that are starting to familiarize themselves with the technology and how it's going to benefit them, most of them are really remaining wary of the scalability issues and the continued risk of financial loss and the regulatory threats or the system vulnerabilities. And then you have fintechs like OGPay. They're also getting into the space, which demonstrates increasing appetite for even blockchain and crypto. But of course, in my opinion, regulatory clarity is certainly crucial to the mass adoption of assets such as stable coins, for example, while of course, brand confidence will also prove central if financial institutions and their customers are able to become comfortable, utilizing specific DeFi services. So I think in whole, having the right approach with the right team and the right infrastructure is really key and critical to any business stepping into the DeFi of it all, or attempting to do what you do, Thomas, so eloquently well, bridging and combining the two through the systems that you have in place. So thank you guys for coming on. It was another incredible segment. Kyle, always a pleasure to have you on. Thomas, feels like I just had you on a few days ago, which I did, and now you're going to become a regular. Paul, you're here all like every other week, so at this point, you're a regular voice.
Pleasure to be here.
Yeah, pleasure.
All right, guys.
Thank you.
That was our Business and Buzz segment brought to us by Revere Securities. That was the awesome Kyle Wool, president at Revere Securities, Thomas Carter, and Paul Caldwell, CEO and chairman at Caldwell Soames. Also, definitely check out Dealbox, great company, and TNS. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. We'll be right back after this.